Hello, this is Mark Ellis, the trusted real estate advisor with Keller Williams, based in Pasadena, California, with more valuable information for you. Today, I have with me none other than Mark Wu of AMS Insurance Agency. I've known Mark for about 15 years. He's been serving the San Gabriel Valley for over 35 years. Mark specializes in assisting buyers with home insurance. He has served as affiliate chair both of the West San Gabriel Association of Realtors and Arcadia Association of Realtors, and has won Affiliate of the Year at both of those respective boards. It's my pleasure to introduce to you Mark Wu. Thank you, Mark. How are you?
I'm doing great, Mark, and I appreciate the opportunity to assist you with this important topic.
Thank you so much. Thank you so much. It's definitely an important topic. I'm learning quite a bit from you. And I really thank you for taking the time out with us so that we can provide more valuable information to the potential home buyers and those who are currently owning homes or owning property. Um, there's a crisis, as you say, in California, and buyers are having a difficult time obtaining the insurance. Can you shed some light on this situation, please?
Absolutely. So the insurance environment and buyers obtaining home insurance has become critical. And basically, this started back in May when State Farm, the largest provider of home insurance in California, take about 20% of all homers, decided that they were no longer going to afford home insurance to any new clients in California. And so many other insurance companies followed suit. And so with that, the ones that were following didn't follow suits severely restricted their ability to provide insurance and started to tighten up their underwriting guidelines, and were being highly selective to who they would take. And so the main reason for that is that companies are just losing their pants here in California. They're not making profit just because of the last decade. There have been major wildfires in our state that have just cost company billions of dollars in claim payouts. The runaway inflation has caused construction costs to far exceed what they projected and anticipated. The regulations, the red tape of the inability for them to charge, just price in that, because it is, a company can't just raise rates for just because they want to raise rates. They have to go through a regulatory process, which is extremely tedious and is full of red tape. Okay. And as a result, they've just decided we don't want to deal with this, even though California is the largest market in all of US for home buyers.
And so that red tape is coming through state regulations?
That is correct.
Okay.
They have to basically, in order for a company to get a price increase above 6.9%, they have to go through a hearing with the Department of Insurance, and that can take months, if not years, to happen. And so due to that factor, the companies have just chosen, we're out of here and just maintaining who we have, and we don't want to do business in California.
Gotcha. So obviously that tightens the market considerably, especially for those looking to own property and have those policies. How is that impacting the market? It's making it obviously difficult for people to capture coverage. So what are we seeing in the marketplace because of that?
It has been really disastrous in the past 6 months. Because what happens is that a buyer, in order to buy, if they have a loan, the lender is going to require them to cover the home, and escrow is going to require evidence of insurance to be had by a company. And so what buyers are finding out is that they're having difficulty securing insurance if they're in high brush area or in high fire zones, or if a company has tapped out in a certain area that they don't want more home insurance in that particular area or city. And the other thing that's happening is that buyers are finding out, that they can't just assume the seller's policy. And even if the buyers happen to have an existing policy with a prior company, that company might not afford insurance on the new house they're buying. So it has become highly restrictive to where they're having to shop around. They're paying double, if not triple, what used to be the cost of insurance, and that's hampering the process of all these escrows trying to get closed when a buyer's in a new home.
Yeah, especially, when we talk about lender requirements, not just for the insurance coverage, but for those who are at the threshold of that debt to income ratio. If the insurance coverage is too high, it throws that off. And, if they're above and beyond the borrower, above and beyond the lender's required DTI ratio, that could blow up the deal.
It does. And what we're also finding out is because now you have a limited amount of players in the business that are taking insurance, they're being highly selective. So even things such as branches that are touching the roof line or over the roof line or even touching the side of the house, or now debris in the seller's yard, or if there's inoperable autos and whatnot, that has to be removed prior to even being able to afford them the new buyers coverage, and all that has to be cleaned up, before. And then other factors is now companies because of that they're being highly selective. They're not wanting knob and tube wiring, which some of the older houses have. Some companies will not take a house prior to 1960. And as you know, Mark, being in an area that's been in existence, many of our homes are older than that. Another factor is that they don't want wood shake roofs. So, that tends to happen more in the San Marino area and whatnot, that if there's a wood shake roof, that even severely restricts the amount of companies that are willing to even insure that kind of thing. So challenges all over the place that one has to hurdle. But the good news is that there is still availability of some sort of insurance out there.
Gotcha. So older homes with hazardous materials, whether it be wiring, wood roofing, et cetera, all these things play a factor. Now, are
Paint
any
peeling
of
in the
these,
fascias. Yeah.
yeah,
It's not
okay.
maintenance in the window sills, whatnot. That can be an issue.
Are any insurance providers wanting to inspect the properties or requesting inspection reports?
They are. This is a new phenomenon. So I've been in the business, as I have alluded to, 35 years. I have never had to provide an inspection report until recently in the last 3-4 months. So what companies are doing is, because they're being highly selective, the underwriters are looking for things that are red flags that can be a potential claim and issue. And so they don't want to get on risks, and they're trying to pick the cream of the crop if they do decide to afford insurance. So we try not to provide that to the underwriters unless they ask for it. But I'm hearing more and more that some companies are automatically requesting that.
Okay, great. Now, if for some reason there's a challenging property and home buyers not able to provide or be provided with home insurance through a private entity, is there another option for the buyer?
There is, unfortunately, in California, we have something called the California Fair Plan. This is quickly becoming the only viable options for many home buyers. It is an industry-funded program where basically insurance companies participated in this pool. So it's not a government-run organization, but industry-funded one. And it's bare bones insurance, so it covers what the banks require. Unfortunately, there's some gaps in the policy, and that is it doesn't cover. So it covers fire, wind, hail, smoke, explosion, which is what like I said, the lending institution will require, but it doesn't cover water damage, theft, or family liability where there's a slip and fall and all that. So we'd have to come in with what we call a DIC policy, which is called a difference in coverage. It's a companion policy. And what it is it picks up the gaps that the FAIR Plan doesn't cover, making it kind of like a whole, like a standard policy. So It is quite a bit more costly, but again, it's an avenue of last resort, and almost in every situation we can get insurance. Um, Sometimes it takes several days longer. So in the past, it used to be I could quote a policy and bind the policy in hours. Now with the fair plan, it might take 5 to 10 days to do that same thing, because we're at the mercy of their customer service reps, and they are basically inundated just because the market has tightened up so much.
Gotcha. Okay. Now that brings another question to mind. Is there any talk about the state, or maybe even at the federal level, there being some sort of government sponsored insurance products?
Unfortunately, not. There won't be the California Fair Plan is a sort of what the state has fallen back on, which requires any companies that are involved in business in California to share in a proportional share in this funding and all that. So I know that there's much going on because our state officials know that there is a crisis here in California for home buyers in securing home insurance, and it's just not acceptable for us living in California where one can't get insurance. But from a federal standpoint, there won't be, because as you know from just politics, it takes forever to push through something like that. And then from a state level, they just rely on this California Fair Plan. So the state of California will not create their own insurance because they're not in the business in this
Mhm.
business. And so
But wait a
they
minute,
just
Mark. Wait a minute. Didn't they repair the 10 freeway real fast?
they did with your taxpayers' dollars and all that. But yeah, but it actually wasn't. I don't know. Somehow funding happened all of a sudden, right? They gave 5 months and it was done in a few weeks. But I'm saying that I know that the legislators met and they basically tabled this to first quarter next year. So I anticipate it's going to only get worse before it gets better.
Okay, great. So let's get on the solution side of this. When someone is looking to buy real estate, how soon should they be shopping for insurance coverage for that property?
That's an excellent question. It used to be we were always considered the the last resort, meaning that everything was done and then they can wait. The buyers could wait till days before escrow closes to start shopping for insurance. That is no longer the case because of the availability of insurance, and so we are suggesting that as soon as the buyer has an offer accepted, that they start searching for home insurance and searching for a carrier that will accept their the home that they're purchasing. Because I have seen in the past few months so many deals fall apart because the inability to secure home insurance, and it's causing the buyers to lose their rate locks or even fall out of escrow and lose their deposit earnest money. So it's imperative that buyers start that process as soon as their offer is accepted.
Okay. So when you hear about those problematic situations, that's because someone is calling you and saying, "Hey, Mark, I've got a problem."
That
And
is
then
correct.
they're looking for you to find a solution.
That's correct. And it's never been more challenging for me to find solutions than it is in present day, um, the last several months, because there's not a month that goes by where I haven't seen another carrier or another restrictions, that even with the carriers that I'm dealing with, where they're saying we don't want this house, we don't want that house. And so you know fewer selections for buyers these days. But again, the good news is that we always have the fair plan.
Okay, sounds good. You know what this reminds me of? When I started in this business, I was originating loans. So I was on the financing side of real estate. And when that Great Recession hit, lenders were falling left and right. Guidelines were changing so frequently that, being able to put a loan together, a loan scenario together, and make it stick for 30 days to make it to the funding table was very, very challenging because guidelines could change in a moment. a lender could collapse in any day, and it was very turbulent times. And this what you're telling me, that's what I'm reminded of.
Yeah, exactly. Now this has happened the first time in my career after 35 years that I am seeing this across the board. It used to be, okay, one company would have a turbulent time, but it was never across the board. And now it's across the board. So
Good, good, good. Okay, well, I'm glad that we're putting this information out there. And lastly, for those who have existing policies, how important is it for them to maintain those policies so that they don't lose that coverage?
that is excellent. So, it's no longer you know you if you don't make a payment, you make a payment late, the companies will reinstate it. So my first advice to homeowners, present homeowners, is get your policy on an auto pay so that there is no chance for that policy to be canceled for non-payment, because you're going to have a very difficult time reinstating that policy. I heard of a gal that was a month back where they were on vacation and the policy went out of force, and they came back and they had the darndest time securing another policy from another company because of that happening. So you don't want to give insurance company the opportunity to non-renew you. Um, Oftentimes companies, while they're renewing it, somehow have found out maybe there's a issue on your property, whether it's they need you to take care of the eaves and paint the eaves, or cut back the tree branches, or remove debris and all that. In the past, clients also used to just get those letters and I could deal with it later, and then no longer is that case. I tell clients all the time, insureds, if you get a letter from your insurance company and they're telling you to do something, jump on that immediately. All right. The other thing that I'm advising clients now in today's market is that they need to learn how to absorb small claims when they have the ability to do that, and know that the home insurance now is for catastrophic losses, not for the minor, $500 water damage claim, or the minor, like I said, $1,000, $2,000 claim. Really, it's for catastrophic, because companies, if you're a new policyholder, most companies will cancel you in the first year if you put in a claim. And if you have several claims within 3 years, companies are canceling you for that. They want to restrict their exposure to people that file claims, and restrict their payouts, because again, remember, it's a highly unprofitable state for insurance companies. So many people are being non-renewed. I'm getting more calls than I ever have in my career as a result, just because I see that happening through my insurance buddies and counterparts with other carriers. So if your clients, your current homeowners, just stay on top of the process. And longevity is key right now. So I don't even try to tell people to shop around, because right now it's not about shopping for rates. It's about being able to maintain what you got, because that's going to be a lot better in the long run than what you're going to have.
And don't file a claim if you don't have to.
That is correct. Oh, the other thing is, a lot of people don't realize that if you call and you're calling the switchboard, and that is oftentimes a documented claim. It's a claim without a payout, and it could be an issue as well. So it's important for them to have a relationship with their insurance agent, and just get what we call claim advice from their agent to help them navigate. Hey, Mr. Agent, is this covered or is this not? What would you advise me to do? And that agent will have a pulse on their underwriting requirement and whatnot. And then also have a conversation, like your current homeowners are going to be getting renewals, and they're going to be much higher than their prior policies. Another way to reduce premium is to take higher deductibles, and then have a conversation with your insurance agent to say, hey, are we getting all the discounts that can be afforded to me? And that way you're knowledgeable, because sometimes a client might put something in that the agent doesn't know, like they've maybe add fire sprinklers and whatnot. And so that many companies have a discount regarding having fire sprinklers or having smoke detector, fire extinguisher, deadbolt locks. So those conversations had to be had. Insurance agent can't just put that down haphazardly. They have to have that conversation, and documented proof have to be submitted to the carrier.
Gotcha. Is there a discount if you live next door to a fire station?
Not so much a discount for that, but it's a whole lot better to have the fire station next door than to be miles away. Absolutely.
Marc, I appreciate your time today. I'm not going to keep you any longer. Thank you so much for your help. Thank you for this valuable information, and we'll certainly be in touch. Do you have any last minute questions for me?
I don't. Just I appreciate your partnership with me, and I'm glad that you're in the forefront of always keeping important topics in front of your clientele to educate them in the process, so that we can navigate through both good times and bad times. And the great thing is, how did you get such a great name? That's all I ask.
Well, it's a name that I'm happy to share with you because I admire you and I appreciate you over the years, and I admire you both personally and professionally. So again, thank you.
Appreciate the opportunity, and blessings.
All right, blessings to you.